Hi, this is Zak Mir, and welcome to Share Talks Bulletin Board Heroes for Wednesday, the 24th of October. Starting off with Alpha Growth, where we've got this consolidation here, positive one either side of 3 pence, obviously looking for 3.3, 3.4 to break ahead of a move to 5 pence plus. The big plus point here, I suppose, in the RSI window, the three bounces for the trace at or above 50, which is normally a leading indicator on decent upside. This stage only back below the 50-day moving average, currently trading at 2.3, really questioning the strong upside argument for the stock. Angus up again today. Just wanted to answer a question regarding the technicals here. This looks like, from December last year, looks like a basing formation that the shares have got, extended one. Neckline on the base is 12.8 pence. The last low there around 4 pence. So if we break 12.8, you can add the difference between 12.8 and 4, which is 8.8, and that would give you your target as far as, so just under 22 pence. That would give you the target on the upside. That also ties in really with the bottom of that gap to the downside that there was last autumn as well. So any end of day, end of week close above 12.8 is the level to watch out for. You can see that today we hit 12.78, so the stock clearly aware of its technical situation. Next up, Tern, stock I haven't looked at for a few days, possibly a couple of weeks. Here we see the shares hugging the area between the 50-day and 200-day moving averages. The 50-day line is blue, the 200-day line rising is black there. Looking for an end-of-day close above the 50-day moving average, just to confirm this breakout we've had from this falling wedge, which was in the middle of the month, around 15 pence. But at least while we're above 15 pence, we're relatively relaxed about the technicals here. A break above the 50-day line at 16.28 pence could trigger the next leg up, which would be logically towards the 24, 25 pence area, which was resistance last month. At this stage, really only back below, you can't really have a stop loss tighter than the 12 pence zone, which is post-August support for the shares. One of the stocks at the moment, which is providing some excitement, is Versarien. Obviously, we've had the rather painful declines from 180, 190 plus. Situation now, we've got a bit of a dance either side of the 200-day moving average at 110. That's still rising, so as I said yesterday, that gives us and allows us to give the benefit of the doubt to the upside, even if you don't necessarily want to on a fundamental basis. Support towards £1, and so really end of day close back above the 200-day line today would be the first sign that we're back in business on the bull argument. That initial support on the way down, £1.10, also crucial. So basically, we want to see the shares back above 110. That closed yesterday rather, so far looks like a bear trap, but was right on the support line from June. To finish off with Zenith Energy, which I covered yesterday, just thought I'd follow through on that. It looked quite encouraging yesterday. What I didn't say, which I forgot to say, was that we actually had a gap through the 50-day moving average at 3.57, so that made the buy argument or that much more compelling than just the falling wedge breakout from 3.3 pence. And the view now is that at least while we're above the 50-day line, we should head back towards the 5 pence area. You can see that the bottom of that gap from June 4.87, so that ties in. And once again, we've got this long and strong candle there opening at the low of the day, and so far back right at that post-August resistance at 4 pence. So look encouraging on Zenith Energy. That's it from me. More updates tomorrow.